possibly years to put together these patented machines. There is a decent amount of capital investment. There are incumbents like Da Vinci that are heavily patented, so there's no imitating involved. There is plenty of R&D required, which could take years, long R&D cycles, and lots of learning curve. There is possibility of liability claims because sometimes occasionally things go wrong and they have to be protected, lawsuits, that sort of thing. And the last is people, the engineers who make these highly sophisticated machines, they're scarce. The labor is scarce. So sometimes when there are only so many people in the world who can make machines like this, and they're already hired by the existing incumbents, in order for you to build a competing product, you'd have to steal them off one of these companies, and that's usually a very tricky affair, right? That limits, that deters new competition. These are the sort of features that lead to incredible financial performance and incredible value creation for owners. So back to the question, why is ISRG so great? Well, you've gotten an indication as to what kind of control they have over this market. Sulaiman, I'm going to move on next to talking a little deeper about the business specifically, ISRG. Do you want to take a pause for questions?
Yeah, Shabab, anyone who has a question on the company, on the industry, feel free to ask. Just the way that you could ask, you could interrupt if you'd like. And you also could, if you look at the buttons down, you'll see one of the buttons called reactions. If you click reactions, there is a raise hand. Anytime you have a question, just raise your hand and I'll choose the right timing to bring you in. فمبدئيا شباب أي واحد عنده استفسار, anyone has a question on how RAS works, how the Da Vinci device works, how long it's been in the business, we're good to go. Then after the story, we're going to start to translate them into numbers in the Excel. So it's better if you're comfortable with the storyline. You don't have any questions, أي سؤال شباب? No, we can proceed, Shabbar.
Okay. All right. By the way, side note, or question rather, are we recording this session?
Yeah.
Great. Okay. Okay. So now that I've given you a picture of the industry, I'm going to tell you a little more about the business specifically. This is how I went about it back in March. What's ISRG like? Well, one way to look at it is who their customers are. And it's usually these hospitals that in the US and elsewhere where they operate, kind of like the video we saw of the Saudi Arabian hospital. They are large hospitals that are looking to have cutting edge RAS technology implemented into their surgical departments. And they are the typical customer of ISRG. And the question now is, we've seen how enormous and almost dominating position that ISRG has. So let's look a little deeper into exactly what led and what strengths ISRG has that have led to that success. Now, this is something I call economic moats. And economic moats are the idea, kind of like the picture you see in the background. I believe in Arabic they're called khandak. So khandak is this moat that's around your castle. If the castle is your business, the khandak protects you from competitors, from new entrants, and from any other stakeholder, whether it be the customer or the supplier, to take value away from you. It protects your business. What are ISRG's moats?
So just to add to your point, Shabbar, الفكرة من economic moats إنه مثل الخندق لما تكون عندك حرب ولا شيء ولا عندك قصر. شوف الصورة اللي ورا القصر. عشان توصل للقصر لازم تطوف الخندق، والخندق فيه ماء وفي تماسيح وفي كل هالاشياء، انه وايد صعب توصل له. زين. التجاره الناجحه هي التجاره اللي فيها وايد خنادق، وايد صعب انك توصل وانك تاخذ فلوس من هذه ولا تاخذ ماركت شير من هذه الشركه. افضل مثال كانوا يقولون مثال كوكا كولا ذيك الايام. يمكن اليوم اتوقع what would you say Shabbar is a company that has the strongest economic moat? Would you say Apple or Google?
I don't believe that's really a valid question. What you need to be asking is, what are some strongest companies in any given industry? So pick an industry. Because, yeah.
What would be like a very relevant, something everybody used before, all the students used before?
Oh,
I mean,
okay.
yeah.
Let me give you some of the most impressive economic moats I've seen in any industry. Possibly the strongest, well, I don't want to say strongest because that implies that it's compared to all others, but let's say among the greatest companies I've seen in terms of moats is Facebook.
Yeah.
And, you know, the way Facebook has stacked its moats one on top of another makes it almost impossible for a competitor to take away their market share, or whether take away their pricing power, or what have you. Right. But many of these IT companies we know are like that. But you could think of more smaller, more local examples too. I mean, I could talk to you about Cheesecake Factory.
Yeah, I don't know how big of a moat they have here in Kuwait, but in the US, yeah, they're
I've looked. Cheesecake Factory is a listed business, and what's interesting about it is that their returns on capital are good, impressive. For a restaurant, especially, a restaurant is a tough business. The only thing about Cheesecake Factories is it doesn't grow very fast.
Yeah, so just to make sure everyone is comfortable with the concept of moats. A moat is something you have in your company that makes it really hard for anyone to compete with you. Okay, some moats are legislative. For example, قانونيا, you cannot be a Toyota dealer in Kuwait. I mean, that's immediately like a moat. You cannot be a Toyota dealer. You cannot have a fourth a telecom company. That's immediately a moat. So these moats are legal in Kuwait, and some of the moats that happen more organically, like in the US, are because of good businesses. تفضل عبد المحسن.
Also, Dr. great examples of economic moats would be Google and Amazon. These are things that we use daily, and they have been pioneers for years in these markets that they are in.
Yeah, I mean, Shabbar, you've been in the US. How can you compete with Amazon delivery?
It's true, and I agree with you, Abdul Mahsen. Some of these large companies, as we know them, Google. What is interesting though is how different the strengths of these different businesses are, and well, that's a discussion for another day. But let me tell you about ISRG, and it'll give you a deeper picture into one way that a company can have not one, but what I recognize is 4 different moats. So let me tell you about the first one, and what I think is the most important moat of ISRG, and that's something called switch cost. So what's switch cost? Well, when hospitals buy these machines from ISRG, first of all, for most hospitals, they're a pretty large capital investment. These machines, the systems, they cost somewhere between $500,000 to $2 million. And that is just one kind of commitment that they make, the cost, which they have to recover. They must be making some kind of NPV. We want to recover the cost of this investment in so many years. That's one. Another is time. So these machines are complex. You know, ISRG sends very specialized people to come in, install them, bring all the equipment, the instruments together. the hospitals not only have to buy the machines, but have to engage in multi-year service contracts with ISRG in just maintaining these devices. It's an incredible, it's a very complex purchasing decision for the hospital. And the third thing, but no less, is training. So it's quite possible that the best surgeons in a hospital haven't had any exposure to Da Vinci systems. And ISRG has this entire department where it sends these expert trainers on the machines to come in, sit down for weeks, possibly months with the surgeons, and to train them how in using these machines in the specific application that they may have. You could have gynecology surgeries, you could have head and neck surgeries. It could vary. So these surgeons have to take their knowledge, understand how Da Vinci system will work, and learn how to use them. Remember, this is not only time that the surgeons have to invest, but it's opportunity cost, because the time spent learning is now time not spent doing surgeries. So that's also something the hospital has to take into account. Think about a hospital buying, say, 4 of these systems, and they spent $10 million on it. That's just a start. They have to now train their surgeons. It's been a couple of years. Their surgeons are perfectly trained for it, and they've begun doing surgeries using Da Vinci systems. If a competitor comes to them, say from Stryker, and says, hey, I can give you a very similar kind of machine that does a similar kind of thing for 10% less, 10% lower price, what do you think the hospital is going to say? He's going to say, you must think I'm crazy. Do you know the amount of work and time and training we have to put in just to get this into place? And now it's such a sticky business. And therefore, switch cost. The switch cost of ISRG customers is really high. And that protects, what's called retention. So there is a very low turnover of customers. Hospitals, they've contracted with them, they stick with them for years, and it gives them pricing power. So when ISRG decides to raise its service contracts, when it comes time for renewal, they raise it by 5%, 7%. Usually the hospitals don't even blink. This is a really powerful thing. Let me tell you about the other 3, okay? But these are less powerful, but still important. The second is regulatory. It's something that Suleiman just mentioned about the legal. It's also called a regulatory moat. And in ISRG's case, it's enormous. I've mentioned this briefly, enormous regulatory requirements from FDA, IEC, all kinds of other certifications. These approvals take a long time. They would deter new entrants. Another is the R&D learning curve. Okay, these guys ISRG spends 10 to 11% of their sales goes toward R&D. So in 2019, they spent about $500 to $600 million in R&D. For a company to be able to even fathom becoming their competitor would have to accept this kind of R&D investment, and not to mention the time it takes. Now, one thing to note is that established pharmaceutical companies, healthcare technology companies like Johnson & Johnson, Medtronic, those guys having a pretty established R&D muscle may find this a little less intimidating than new entrants, but there you have it. Now, the last one I'm going to mention briefly is something called expertise network effect. So here's how it works. In the RAS world, Da Vinci system is already very popular, right? We know they control 60% of the market. Now, with all these Da Vinci systems installed all over the place, they have something like 3,000 installed machines in the US. With time, these surgeons who have learned how to use Da Vinci machines, the system becomes like an industry standard, kind of like Adobe Photoshop is, right? It's just when a new hospital decides on getting into RAS and they have to compare their options, they may think that the best surgeons out there who know RAS have been trained in DaVinci systems. It would make sense, they would be very compelled to continue going with. So the more machines out there, the more doctors are trained for it. And the more doctors are trained for it, the more other hospitals are likely to go for the same machine, because you want to attract the best talent out there. And this is called a flywheel effect. The one thing feeds on the other, and the advantage just keeps getting stronger and stronger. Part of the reason Facebook is such a strong company, and like you said, Abdul Mohsen, Google enjoys network effect. Now, network effects come in many flavors. There are about 15 different kinds. Expertise network effect, which ISRG has, is just one of them. So I'm going to wrap up economic moats with the 4 moats I mentioned. Switch cost is the first one. Once you become their customer, really hard not to continue being their customer. Regulatory, really hard because of the FDA approvals required. R&D and learning curve, steep learning curve, lots of R&D dollars required. And expertise network effect. The thing feeds on itself. These 4 things, I realized when I did this report and I looked into the business, I said, okay, so I see the fact that they've had a great financial past, but this is the reason why. This is what protects them from competitors coming in and trying to take away their incredibly juicy 60% ROIC. Now, that brings me to the end of the story, the narrative of ISRG. I'm going to take a pause here, Suleiman, if you want to, if we can take questions.
شباب أي واحد عنده استفسار feel free to ask Mr. Shabbar, and you can keep it open, guys, even if it's something outside of ISRG, more on analysis or modeling. Feel free to ask any questions. Let's give it. I think we're good, Shabbar.
Okay. Good.
Even as we proceed, guys, feel free to ask questions or raise your hand. تفضل عبد المحسن.
A question: is there technology patented?
Sorry, say that again.
Is there technology patented by the U.S. government?
Yes, very much. They're highly patented machines. They have entire portfolio of patents that they keep on renewing that protects them. So definitely the technology is patented.
Brilliant. I think we can proceed, Shabbar.
Okay.
Everyone, even just as Abdul Mohsen just did, if you have a question, just raise your hand and I'll find a good time to bring you in, guys.
Right. So that brings us to the end of the story, narrative of ISRG. Right? We've got a picture of what the industry is like, the fact that these guys are a leading company. We've got a picture of a little deeper, specifically of the business, what they do, who they sell to, why they have been so successful. Right. So just remember that. What we're going to do now is we've gotten the story and we're going to connect it to the numbers. We're going to see how that works. Suleiman, I'm going to go ahead and open the Excel sheet and just introduce it over the next 5-7 minutes until we come to the top of the hour.
Oh, okay. Shabbar, would you want me to share it with the students now or keep it for next time?
Let's just show it to them on the screen, and you can by all means share it after the class.
Okay.
I mean, this is unless you believe it will help, you know, you could probably just send it to the chat window and everybody would see it right away, right?
Let's see if I can attach these things. أنا أدب لكم إياه. Okay, guys, I'll send it over and in the Teams window. Let me see if I can send it in the chat.
Yep, I can do that if you're facing any trouble.
No, it's okay.
Okay.
So okay, guys, can you just make sure? Can somebody raise your hand if you see it in the chat? Just give me a green light if you see a file, an Excel file in the chat. ممتاز. شكرا. خلاص. You can download this and if you want to follow up with Shabbar. So this is the Excel model that he used to come up with a valuation for ISRG. Okay. Go for it, Shabbar.
Okay, good. All right, guys, this is just an introduction to this Excel sheet. We're going to talk about it in detail in our meeting on Wednesday. Have a look at this. Take a close look. I'm sure you'll have questions. You'll see lots of numbers. Don't be intimidated by them. The logic at its core is very straightforward. The reason I like this company is, although the machine they make is really complicated, they have just this one single product that's reasonably easy to understand. And that makes the business model pretty straightforward. And when the business model is straightforward, it's usually not a terribly difficult thing to do a decent DCF and come up with a pretty solid story. Now, what I'm going to do, what I did last year, was I came up with two narratives. That is, two possible ways the future of ISRG can work out. And the reason to do this is what's normally called a base case and a best case. So you come up with two values for a business, right? Two stories, you convert to numbers and come up with the values because it gives you a range. This science, an art of valuation, is not about precision. It's not about getting an exact number. It's not about the first decimal place. It's really about being directionally correct. You want to be approximately accurate, and that's usually good enough when you found a great enough opportunity when the price is good. And that usually leads to pretty good results. And this is what the history of good fundamental valuation has shown. So back to ISRG, you'll see here, those of you who've opened the sheet, those of you who haven't, have a look at the main screen here. See the table, for instance, this is narrative one, right? It's called Riding the Wave. And broadly, you'll see total market, for instance. I'm making assumptions about the future of how each of these things is going to work out, the industry of ISRG and specifically the business. So the total market, which is the RAS market, the industry reports told me that it's worth about $7.7 billion today, right? I'll take that as a given. So $7.7 billion, and they say that it's going to grow at about 10% year on year. That sounds plausible to me, and so I take that assumption. That means that 7.7 in 10 years, by 2029, is going to turn into about $20.5 billion. That is the pool, that's the market that ISRG is going to operate in, right? So you'll see the total market, here's what it is in base year 2019, assumptions about how it's going to grow in the first 5 years and the second 5 years, and then onward from year 10, which is terminal at 2% risk-free rate. The story link is important. I want you guys to read that because that's where I explain the logic behind those assumptions. So the same with market share of ISRG, today they control 58%. I made certain assumptions about how it's going to turn out, explanation in the story link. Same thing about sales growth, operating margin, also very important for this business. Reinvestment, which is money that they're going to generate these cash flows. They have to take a piece of it, put it back into the business to generate more sales the following year. That's reinvestment, and I discussed the logic behind that, what I'm assuming for the next 10 years. And finally, cost of capital, right? So CAPM based cost of capital, what we're assuming. Further down, you'll see the main body of how those assumptions are turning out, how the sales are happening, cash flows, terminal, and then all the way down, you'll see with the debt removed and the cash added, this is all basic DCF stuff. You divide by the number of shares and you get a value. So narrative 1 gave me a value, narrative 2 gave me a value. It gave me a range, and then I had to compare that with the market cap, with the price as it was in March 2020, and make a decision about whether it was. I mean, I knew it was a great company, but whether it was a fantastic time to get into this stellar business. I will leave that conclusion for Wednesday, but that brings me to the end of our discussion today.
Brilliant. So, Shabab, does anyone have any question regarding what we just shared in the Excel sheet? أنا توني نزلت إيد عبد الوهاب وأتوقع منيرة، كان عندكم سؤال ولا رافعين إيدكم حق إنه وصل للشيت؟
لا، كنت بقول إن الشيت ما يقدر أنزله، فإذا تقدر تحطه بتيمز يكون أحسن.
ما تقدر تنزله. أوكي.
ما أقدر أنزله، يطلع لي كليك داونلود بس أدوس وما يصير شيء.
ما ينزل. أوكي. خلاص أنا أنزل لكم إياه على التيمز حتى الشباب. Just to recap what you said, شبر. حاليا احنا عندنا شركة قدامنا، زين. A common mistake I've seen in some of the startups here in Kuwait, they look at their historical growth and they project it for the next 5 to 10 years. What happens if you look at the numbers and you didn't do what Shabbar did over here, is you look at the environment that you're working on, you realize that some of these companies in Kuwait are projecting that they're going to serve more than 5 million people. There are 4 million people here with expats and visitors and tourists and everyone. Okay, so that's the problem sometimes when people don't just look at the numbers, they look at the history and they project it for the next 5 or 10 years. You have to be comfortable knowing the environment you're working on. Is it a growing environment, static, or a shrinking one? That you have to be comfortable with. Number 2, what percentage of this environment are you going to be working in? The 2 times I want you to be critical is when somebody says, I have a $1 trillion market and I want 0.5% of this market. Here you have to be concerned. Or when somebody says, I have a $100 billion market and I'm going to own 99% of that market. Even there you have to be concerned. Usually, most of the time, they fall somewhere in between here, these numbers. Let's say, I mean, Shabbar, what would you say between like 10 and 70% of market share?
Most businesses?
Yeah, I mean, most decent businesses.
I would say that businesses tend to find their best scaling effects by the time they reach about 20%. Usually the scaling effects kind of top, but the where they can be a big range. As you saw in ISRG, they control 60% of the market.
Yeah.
I looked at a company called Home Depot, which is a well-known home improvement retailer. And in many ways, they control 70% of the world's home improvement retail market.
Okay.
So it can be very high, but that doesn't mean that companies that control a lot less at 10%, 20% can still not be absolutely phenomenal businesses.
Great. Would you be concerned if you saw companies that project they're going to control 98% or 97% of the market, or have you seen good examples?
Become almost a monopoly of that industry?
Yeah. So usually, I mean, if I was going to give you like a rough range, if that's how I would like throw it in. If it's between like 10-70, you would be comfortable. Less than 10, they might never be able to scale. More than 70, they might be like too optimistic about these numbers. Would you agree, or you want to change the numbers?
No, I'm sure this is true for many industries. What I would say is it's important to look at it in an industry specific way. There are industries where network effects, the ones I just discussed, are an extremely important element of becoming a dominant player. And network effect companies have what's called a winner take all situation. So you can have a situation where you have a phenomenal business because of its network effect. It really does kind of take over and becomes the #1 dominant player, with the others falling by the wayside. In many businesses where network effects is not the situation, or where you could have a potential of the government coming in and there being a class action, kind of like the US government is going after Google and Facebook right now.
Yeah.
You could have that deters a very high. But yeah, I think I generally agree with you that some company projecting 98% market share, I'd really ask them if that's their story, I'd ask them what their numbers are. And I'd also see if that industry has any history of somebody having done that before.
I see. Yeah.
So you kind of have to do a sanity check
on these numbers. So I think we're at the 9 p.m. mark. The main idea, guys. So just look at the sheet, be comfortable with it. Next on Wednesday, inshallah, we're going to be going through the numbers and hopefully covering the more of the science part of this class. Do you have any notes for the guys, Shabbar, before Wednesday's class?
No, I think you covered it. Have a look at the more familiar you guys are with the sheet that Dr. Suleiman has shared, the more you'll enjoy our discussion. Please look into it, come up with questions, bring that to us on Wednesday. It'll make our discussion more productive. And have you already shared the slides, Suleiman?
I haven't.
Okay, so please do that too, because that was the first part of our discussion. You guys have questions related to that, the story, the business, the industry. Perfectly fine. Come back with questions. That's all I'm going to say. And it's really fun being here and seeing you guys.
Brilliant. Same here. It's a privilege to have you here, Shabbar. Thank you very much, and we'll see you inshallah on Wednesday.
Inshallah.
Okay. Thank you everyone for your time. If you have anything to do right now, عليكم بالعافية. We'll see you inshallah يوم الأربعاء. No class on Tuesday and Thursday, okay? Just so that you know. Thanks everyone.